Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today we are going to be revisiting Albemarle stock. As always, this is not individual investing advice. This is just how I analyze stocks. I've had a lot of requests to come back and take another look at Albemarle since I posted a buy video where I bought the stock back in, I think it was in November. It was around 117, I know was my buy price, so right there. Stock is now down about 20% since then, after bouncing a little bit, kind of shuffling around. So I went back and rewatched that previous video to make sure that I don't contradict myself too much. And I still have the same exact thoughts that I had then, but I've had some requests to kind of reaffirm that I haven't changed my mind on anything. So if you go back to that video, I'll put a link in the description. Start at like the 14-minute mark, and you'll kind of hear me start talking about the possibilities about why this is probably a super cycle, and why. So at the time when I went back and looked at it, I think the expected earnings for 2024 were $17 a share by analysts, and I was like, that's not going to happen. But I didn't really know how far they would actually fall. I talked a lot about potentially going back to these pre-COVID levels, like 604 that they earned in 2019. And what could happen to the stock if that happens, and then to be prepared if that happens. I was thinking from my memory that in the $60 ranges, is like the 60s was where I was thinking. But when I watched the video, I said in between $50 and $60 a share is probably where we would consider adding another position. And I still feel that way. After looking at it again, I think what we don't necessarily want to happen because we bought one position, but what I would want to see before I bought another position would be the price to dip below $60 a share and then to gain some positive momentum after that. So this first position we bought on the way down almost hit that little valley here, this little drop off and bounce. And because there was a possibility maybe that it would just be like a shallow, there's secular growth trends under this. And so there's a possibility that, and analysts were predicting like just triple earnings what they actually are probably going to be. So that I totally said that they weren't going to be right, but nobody really knows what the bottom of these cycles are going to be like, earnings wise. And this has to do with the price of lithium. I didn't pull up a chart of it, but we had a big demand like a lot of commodities, especially when at the same time we had this kind of electric vehicle thing. They got super popular, and now that interest rates are higher, people can't afford the vehicles. Some of the vehicles people don't like. Tesla probably, which I'm going to talk about in a minute, probably overproduced, or at least established production to overproduce. I don't know if they've actually technically been building up any inventory, but this I would treat as like a super cycle. We actually had another super cycle back in 2017, again based on kind of the same stuff, except for with Tesla and everything like that, and that super cycle came down. So what I mean by, you can actually really see when I say super cycle, this was more of a super price cycle here. This time, more recently, we got the earnings to match. So I always say I don't have a strict definition for super cycles, but I know them when I see them. In this case, this gigantic spike in earnings for a commodity producer, a specialty commodity producer to some degree. Albemarle management says it's specialty. I think it's more commodity, but yeah, it's maybe a slightly more scarce commodity. But you can see it clearly. I mean, not only the price, but the earnings. So, and now sometimes when you do charts like this over the very long term, it helps to shift them to a log scale, which I might be able to do in fast graphs. I'm not sure. Let me check real quick here. I think I'm just gonna peek and see. I thought I saw, there we go, right there. I've never done this before, but usually I use Y charts. So when you use the log scale, you can see basically what it does is you see how this what was a gigantic spike is kind of smoothed out a little bit. When you look at a log scale price chart, which is usually what I'm looking at rather than the earnings, on a deep cyclical. Any kind of bump, you can basically look at the historical bumps, which this one's kind of weird because it has pretty big price cycles. Like this was the big one. Then this was, so these were kind of normal, I would say. And then this one was, at least some time had passed, but this was closer to a super cycle. And then this was a true super cycle. So it even surpassed the previous super cycle. Normally, if you take a stock, even a cyclical one, over a long period of time like this, and you put it in log scale, it will smooth out these quite a bit, especially if you go, this is only 20 years, but if you go back like 30 years, then it becomes kind of more important. And especially a lot of times you could go back to the year 2000. I don't have enough time here, like data, to go back and look at that period, but you can see how much more it smooths it out. So if you see a big bump on a log scale, even over the long term, it can be meaningful to help identify a super cycle. But this one's so obvious that, and having seen what happened with the meme stocks and all the other stuff, we basically know that we're coming down off this. So it's very hard to know where super cycles bottom. So whereas this first position I would buy on the way down in case the secular growth picked up, and there were stocks I bought around this, well, it would have been the year before, but like around that, this still, there we go. Back to like 22, it doesn't quite match up with the semiconductors. But if you think of the semiconductors that we bought in 2022, like late 2022, they were coming off of pretty big cycle too, but that secular growth underneath it picked up and they rebounded, right? So if you look at like AMD, let's just look at AMD real quick. So here we see it. So totally super cycle and 65% drawdown crash. And I would say we didn't really know where these earnings were going to bottom here, but since we have kind of the AI thing that kind of helped pick things up, then we get this upcycle, we relatively shallow earnings down cycle, and the price bottoms back here and rockets. So this could have happened with Albemarle. So that's why that first position comes in. I think we even bought Albemarle when it was 65% off its highs, I think that sounds right. So that was the possibility. Now that possibility didn't happen with Albemarle, but it did happen with AMD. So I always try to explain to people, whoops, that's right, these different outcomes, potentials, so that in your mind you're prepared for it. Because even though I talked about this in my last video, the reason everybody's asking me about, like lots of people have asked me about this one recently, and the question is always the same, whether anything's changed, and I'm like, not really. We didn't know if it would bounce or fall more off the super cycle. We didn't know. But now we pretty much know that this is gonna be a pretty nasty down cycle, I think. So waiting, because you don't know where the bottom is, you want, one, the price to be super low, and we can use these as a reference back here, this down cycle, to get an idea. Actually, if you look at all these, they're probably pretty similar. 40, add inflation, 40s here, 50s, right? So 50 to 60, decent spot for a rough bottom to come along. And then because these cycles are so big, usually you don't have to try to pick the bottom. If you just get it at 55 bucks a share, what do we do? So let me just, let's see, 117 plus, we'll just say 55 divided by 2, so that gives a cost basis of $86. Then you could get a double at 172. So if it comes down here, you buy a second position, you get an $86 kind of cost basis. Then if it comes back up here, which I think I showed last time, to 184, 173, that little peak right here, before it really took off on the, like this would be kind of more like a normal upcycle, like a strong one. Happened really quickly, but you could spread that over 5 years and you get yourself a double, and then you have a double position. So you get two doubles, basically like 200% returns. Pretty good. And sometimes these bounce back really fast. So it might take 5 years. It might take a little bit longer. It's hard to say. But sometimes they can come back with no warning. You'll notice the stock price started falling a full year before earnings fell, right? and the stock price really started jumping a full year before earnings jumped, right? So the stock, wherever it bottoms, it will probably bottom a full year before that you get earnings evidence. So it's going to look, but this is why I use price instead of earnings with deep cyclicals. The earnings are going to lag. You're going to be late. When you buy when the earnings are good, you're one of the bag holders at the top. Okay, so my second message here is I was looking at the divergence in terms of how far they've fallen off their highs between Albemarle and Tesla, which obviously needs lithium for their batteries. They're basically like a battery company. So I went and pulled up that chart, and we can see that Albemarle, well, first of all, look at the historically since 2010, like around the time Tesla went public. Now, these aren't perfectly correlated, but they're pretty closely correlated when you consider how big these moves are, right? If I was to put the S&P 500 on here, you would see a big difference between it and these stocks. So 11 sell-off, they both bottom about the same off the high. Tesla was a little more volatile in that little section there. Then in the 2015 downturn, they both bottom pretty similarly off their high. Then the correlation gets even tighter at 2018. So this spike down, they're almost the same. And then we get a faster recovery in Tesla. But the bottom again is about the same during the 2020 sell-off. And then this time Tesla was a little bit sold off a little bit more in 2023. But now we see Albemarle is down to those levels too. And Tesla stock is closely following. So, but there is a big gap here. Like Tesla would probably have to lose 40% to more to maybe get down to 71, because it's not like 55 minus, it's not the difference between these, it's the magnitude. So if a stock is 50% off its highs, if it goes to 75% off its highs, then it loses 50%. So that's a rough estimate. This is what, probably like a 40% drop to get to fall equal to Albemarle. So I would be I've been pretty bearish on Tesla for quite a while, so this isn't anything new, but just in terms of the patterns that we see here, and that makes sense because if demand for lithium goes down, the price of lithium goes down and Albemarle stock follows. But you think, well, what is the source of most of that? Well, it's batteries for things like electric cars. So that means the demand looking forward for those new electric cars is probably lower, and that probably means Tesla sells fewer than expected or than they did in the past, and I wouldn't be surprised if the stock price falls more. Always hard to predict with Elon what's going to happen, but that's something I think a Tesla shareholder should be aware of. This isn't looking very good for them, stock price wise. So Tesla's still a sell, and I would wait to buy more Albemarle. And I think that's all. Again, these are small positions. I always, 1% portfolio position. So I did this same thing in 2019. Nothing ever is perfect, but down here I bought twice. As a matter of fact, I think I bought like right here and then immediately fell more. Maybe it was right here actually. And then it immediately fell more after that, and I was able to pick up some more. But so that's it. That's the strategy. And I don't know what's going to happen with lithium, but usually when the prices get low, there are people that go out of business. And what is people ask me about the other lithium stock too, and I don't. Maybe I can find. There's a couple other ones actually. Usually it's Lithium American Lithium, and there's two different. That's funny. Oh wait. One, are those the Canadian ones? I definitely have had people ask me about that one. Yeah, let's take a look at it real quick. Okay, so not very much information on that ticker. I thought it was, I probably should have made a note. Thought there was one that had a little bit more. Yeah, so this is American Lithium. I think this is one I get asked about quite a bit too. I kind of view them all the same. When it comes to deep cyclicals, I find the ones that have the longest history. And Albemarle's been around a long time. I think they're still the biggest. And so if things get really nasty, I mean, one of the reasons these cycles turn up is because the weaker businesses go out of business and they don't produce as much lithium. So now that doesn't mean it can't be Albemarle. Maybe they're the ones that don't make it through, but I like to see the businesses that have a long history of survival. That's where I put my money. So when it comes to lithium, I go with Albemarle. There's the Chilean one too. I can't remember what the ticker is, but I kind of feel the same way. It actually has a longer history, but then I have to deal with, all the things that come with emerging market stocks and things. So Albemarle is my play here. And it's not that I think there's necessarily anything bad about the other ones. I just like to have the proven historical survival and recovery, right? We can see these guys have a history of recovery. To me, that's the ultimate kind of tell that they'll probably be able to do it again. All right, if you found this useful, hit the subscribe button, hit the like button. If you have any requests, let me know in the comments. I'll get those on the ticker. I'll get the tickers on the whiteboard behind me. Eventually, I'll make a video for you, and I'll see everybody later.